Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Alright, let's get into it. Today is September 10th, 2021, and Bitcoin is looking meh. Although, here's why our next move is to the upside, and I'll show you why I believe that is. All right, let's go in to a smaller time frame. Right now we're on the daily chart. We see that we had that large flash crash on the 7th of September, followed by a bit of accumulation. We're lessening the length of the candle wicks, right? You see that these candlesticks are getting thinner and thinner, meaning that we're coming to a decision point. Is that going to be another move to the downside, or is it going to be to the upside? Some people say, oh, it's basically just kind of accumulation, redistribution, ready for another move to the downside. I would disagree, and I'm going to show you why. Going into the 4-hour time frame, here's the thing I'm seeing. First and foremost, actually, let's go into the hourly time frame and reiterate what I said yesterday. For those of you subscribed to the channel, you'll know that I see a Wyckoff accumulation pattern, not a redistribution pattern. If you're not sure what that is, I encourage you, go on Google, look that up, see what Wyckoff accumulation is. Essentially, the asset is accumulating, buyers and sellers are deciding what to do, but there are more sellers than buyers. Or sorry, there are more buyers than sellers. More people think that a markup is coming and that the asset has upside following this move. Just looking at the hourly time frame, I'm not seeing too many signs of weakness. Obviously, we have some, but not too many. What would really worry me is if you see right after the flash crash, what we saw here, the type of candle wicking, the wicking to the upside, meaning, there's kind of some buyers, but there's a lot of selling pressure, right? So anybody who wanted to buy and sort of mark the price up was getting pushed back down. There was a lot of selling pressure. However, there was strong buying pressure as well, showing that, okay, that is the fair market value. So you have strong wicking to the upside, strong wicking to the downside. And then you got that markdown kind of testing the bottom of that range that's normal and showing that, okay, that's the absolute lowest price that this asset will go to at this moment in time, 45,000. And you got that big strong wick there. So that's what that was. And then some more consolidation, little upside. Okay, not yet ready to mark up. And that's testing the top of the range, right? And now we have the moment where we're preparing to exit, it looks like, preparing to exit this trading range through this one last test of the bottom, or, the bottom portion of the range, and now moving on over to the top. What will be crucial is when Bitcoin passes, right now it's on the chart as $46,419, because that is the 21 EMA. That, if you're subscribed to the channel, you'll know that's the moving average that really signifies strong uptrends. And even on the hourly, being above that is significant. Okay, and that would put you between the 21 and the 55, and obviously subsequent to that, getting above this point of control, 46,897 on this chart. So basically getting above 46.9, then you're really clearly marking up. But I think this is just slow action because that 7th of September drop, that flash crash was so traumatic. Expect to see some accumulation, and accumulation takes time. We all know that because that's what happened in the May crash, right? It took us sometime, months, to accumulate. I don't think this is going to take months. I think that this is nearing its end. What I wanted to show you why I think the move is going to be to the upside. Let me finish here. So we saw the wicking to the upside here. Here you see very clearly there's not as much wicking. Most of the wicking's to the downside, showing strong buying pressure, not selling pressure, right? So you look and you see some wicking to the upside, but not as much as here, right? This is basically saying that this portion of the trading range is fair market value. People are almost certain that this is a fair price for this asset because there's not that much wicking to the upside. Rather, there's a little more wicking to the downside, right? And more you see the wicking exclusively to the downside, especially as we move to the lower ranges of the trading range. So that's what is showing me some signs of strength and not so much too many signs of weakness. When you see an asset with a lot of wicking to the upside, you know that it's probably going to be marked down sooner than later. All right, now going into the 4-hourly time frame, if you're subscribed to the channel, you'll know that the 4-hourly time frame is one of the most, it's one of the lowest reliable time frames. It's one of the lowest high time frames, if that makes any sense. It's not the daily, it's not the weekly, but 4 hours is pretty reliable insofar as patterns go. Patterns are quite reliable in the 4-hourly time frame. It's not a short time frame for in my estimations, and a lot of other traders do use it in that way. You see on the 4-hourly time frame a really strong candle here. And you saw another really strong candle here showing lots of wicking to the downside, basically showing that a markup is imminent, right? And another test down. And again, there's a lot of buying pressure here. This is basically a buying box, if you will, from 45.6 to 46.2. Okay. And the second more significant thing is we have strong bullish divergence on the 4-hourly time frame. If you look and see, let's get the pen out. So we have let's see. Okay, here it is. So this low, no, where it is? Where is it? Okay, yeah, here it is. It's a little more subtle because this pattern, this range hasn't been playing out for too long. It's harder to see. It's not as usually this kind of challenging, but you see this dip from here, this high, and this sort of this low. So high to low. This is, and then in the RSI, let's make the RSI bigger. It's here, right? You see that, and you see where that is on the chart. We're about at the same point on the chart as we are here. However, this dip here is all the way up here. Do you see that strong bullish divergence? They're around the same latitude, or they're around the same price point on the charts. And actually, this dip here that we're in currently is lower than this one here. Yet on the RSI, this one is lower and this one is higher. Let's draw the arrows just to make sure everybody can see what we're talking about. But that strong bullish divergence on the 4-hourly time frame signifying an imminent move to the upside. So there's that, and then here you have kind of that. So that's the divergence. Divergence basically means there's a discrepancy between what you're seeing on the charts and what you're seeing on the stochastic RSI or the RSI. So right, this dip is here, this dip is here, all things equal, it should probably show as being equal on the stochastic RSI if it wasn't indicating a strong move to the upside. All right, so that's pretty much it for Bitcoin. Now, altcoins are pretty much doing their own thing. Some are just now starting to show signs of weakness, given that a lot of people in the market do think that we're in for a markdown imminently. So you do see that reflected in some altcoins that just 24 hours ago were just running like there's no tomorrow, you will see kind of that indecision play out in the altcoin space as well. And this is the power of tracking Bitcoin as an overall sentiment for our market at large. All right, if that was useful, please like and subscribe to the channel. Share the video when appropriate, and I'll see you guys tomorrow. Have a great weekend. Bye.